Hi guys, how are you? My name is One Titanium, the founder of Investing MMT, and I also run a Patreon page for those who wish to learn how to apply MMT into the real world and also how to invest. And I'm also the co-founder of Pure MMT for the 100% Beyond the Memes, along with my friend Edward Delzio, who is the author of The National Debit, a must-have book for everyone on the planet. As far as I'm concerned, if they want to understand how macroeconomics and the monetary system actually works and not how they think it works. So in this video we're going to go over Bitcoin. I call it con because I think it's full of shit, but it doesn't mean that we cannot analyze the chart and come up with likely scenarios of what's going to happen next. Now the first thing you're going to notice in my charts that I don't have anything. There's no RSI, no stochastic, no moving averages, none of that stuff, because that's all garbage. That is all designed to sell you bullshit. Okay. Now the problem with investors is that they think that guessing is what makes people rich, and that's not true. The other thing that traders have a complex with is that they don't want to take responsibility for their actions. So they go out, they put some money in an account, they open up this web browser or whatever, and they have a buy and a sell buttons up there. And it's the freedom of do whatever the fuck they want to do. And because everybody, and that includes me, everybody on the planet believes that somehow they are smarter than everybody else, that they're going to prove it by opening up this trading account, and they're going to buy and they're going to sell based on their vague hunches and feelings. And what that does, my friends, is it gives you freedom. Okay, that's the big selling point: freedom, greed, money, okay, and giving the finger to your boss. So at some point in everybody's life, especially now these days, people are going to go out and they're going to do this. Okay. The problem is that they don't want to take responsibility for what they are doing. So the investing / trading community is going to come out with books and tell you, hey, you know, if you add an RSI, you can tell when it's overbought and oversold, and you can trade based on that. And then you're saying, wow, this is great, because if the RSI fucks up, not my fault, it's the RSI's fault. Okay? Same thing with MACDs, and if you put in MACD and an RSI and a stochastic, well, now you have triple the coverage. It's kind of like putting, you know, these icons. Let me get that. Okay, here it is. This is Greek car insurance. As long as you start putting a whole bunch of icons all over the car, somehow, you know, God and Jesus are going to come and protect you from accidents. You see what I'm saying? Forget about the way you drive. Don't worry about that. Just put the icons up there, and you'll be good to go. Well, it's the same thing in trading with these stochastics, candlesticks, and all this nonsense. Okay, that as long as you put enough of them on there, okay, and there's always going to be another one, the one that's the magic, you know, golden bullet that's going to make you rich. If you put enough of them, you know, it's not your fault. It's your interpretation of the data, because the data is somehow not aligned properly, and we're going to hire people to go out and build algorithms that are going to figure it all out, and so on. Remember, people who are guessing, people who are degenerate gamblers, will never accept responsibility. And I know this to be true because I was one of them. Okay, that's how I got started in trading too. My first airline, the first stock that I ever bought was TWA. It was $1. Okay, went out, borrowed $2,500, bought TWA. I was so sure it was going to go up, and it did. It went up to $2, made my money, sold it, went back down, took that money, $5,000 now, go back, buy it at $1, goes back up to $2, sell it, and repeated it 3 times. And then the third time, when I bought, the next day when I woke up, literally the next day I woke up, TWA was bankrupt, and its assets were purchased by American Airlines, and I lost everything. But you know what? And this took some time. You know what? I went out and told everybody how successful of a trader I am, how I know airline stocks, I'm a pilot, and I'm this, and I'm that. And, you know, it started down a journey that blew out several accounts because I couldn't be wrong. You know, it's not me. And I've used just about every indicator there is under the sun. Read I don't know how many books, technical analysis, and all this nonsense. Then I went into the fundamentals. I'm going to check fundamentals. Let's buy Buffett. The moat. Yeah, Buffett books. The moat. That's it. That's the ticket. Okay. And this went on for now. It's been 28 years. I've done it all. Believe me. So I know exactly how you think, and I know how these Bitcoiners are all thinking. So just like these icons on this car, okay, stochastics and RSIs and all these indicators are all faith-based. Has nothing to do with facts, math, or data. Nothing. All faith-based. And it's a pressure relief valve for you to blame the stochastics or your understanding of whatever the 50 billion indicators that you have on there, to relieve yourself from that responsibility of admitting you don't know what the fuck you're doing. Okay. So in this video, I'm going to use what I call bare knuckle charting. We just look at the charts and we start to understand how it behaves. So the first chart pattern that I'm going to show you is the Eiffel Tower. Okay. And basically what happens is it goes up in an exponential growth rate and then it collapses. Okay. You can never ever know when the collapse comes. It is impossible. Again, your job is not to guess. You don't guess. Okay. Your job is to recognize what the pattern is, what is likely to happen, and then go from there. So as you will see in this pattern right here, this part right here, you're going to see, if I can only draw, you're going to see an M pattern. Okay, it's a 1, it's a 2. See that right there? That second bounce. Okay, if you draw another one here and another one here, you will get a topping pattern that is repeatable. Okay, that's the M pattern of what I call. It's a lower high M pattern and then it collapses. So in order to understand a chart, you're always going to start with a monthly, and you'll go to a monthly chart and you're going to see something that it looks crazy. It's just 2 lines in 2 months. It's just exploded from 5,000 to 20,000. But when the price is so such a big, huge range, what you want to do is you want to make it a log. Okay, and now you can start to see the pattern a lot clearer. And the next pattern I'm going to show you is the most basic, which is all price action goes up once, it retraces, and then it goes back up again. Okay, this is called a 1, 2, 3. This happens in any chart all the time, no matter what the time frame is. It's always the same. So the question you want to ask yourself, does that pattern exist? And the answer is yes, it does. So we have the bottom, we have a 1, we have a 2, and we have a 3. Okay, again, 3s are ending patterns. Usually when the 3 ends, it starts to fall back down. Alright, now again, I'm going to emphasize, you never ever know when 3 or a wave, any wave, is going to end. The only thing you know is there's another one coming, or there's another one coming in the opposite direction. That's the only thing you know, but you don't know when it's going to end. And that's very hard for people to grasp sometimes, that the unknown, the variable, especially people that are very technical. It's very hard for them to think in this manner. So having said that, let's assume that this is the end. This is the wave 3, and it's going to end at 20,000. Let's just make that assumption. So then we're going to draw a line here, and we're going to draw another line here, and what you're going to see is a structure. The structure is a rising, somewhat closing wedge. So with that in mind, what we're going to do now is we're going to go down to a weekly chart. Okay, and again you see the 1, 2, 3 up. Nothing has changed. Okay, 1, 2, 3, and we're assuming that this holds. We don't know if this is going to continue higher, but let's assume it does. So then we have the 1, 2, 3 up. We have the structure, and now we look a little bit closer. And what you'll see is, and I wish I didn't have these drawings on here, but let me just take them out. What you'll see is that it's still very much in a bullish uptrend. And what is a bullish uptrend? Well, you can see this is kind of accelerating to the upside. See it? Okay, it hasn't broken down on a weekly chart. So what it looks like, it's a large erection, right? So the more erect it becomes, the more likely it is it's going to reverse. Okay, so we can see that on a weekly chart. Let's go down to a daily chart. Oh, and by the way, what if I take it off of log? Well, now it just looks screwed up. Now it's starting to have that formation of the Eiffel Tower. Okay, you see it? See that? We're starting to get that up move, right? And it's reversing. So okay, so we have to go down to another time frame. Let's make it a daily. Now, without the log in there, it is an Eiffel Tower pattern on the downside. So we're getting more pieces of the puzzle. So think of this as an X-ray, and you just, doctors know how to read it. Professional chartists know how to read it. Laymen don't. All right, so we have the 1, 2, 3, and we're starting to have this rollover. But again, we are essentially in an uptrend. Whether you want to use these lines here or you want to use the previous lines, it's still in an uptrend. All right. So let's go back in time. Now, I want you to remember this. There's 2 times that something is going to reverse. It's either on a wave 3 or a wave 5. Okay. Now, indexes are a little bit more kooky because of the savings bubble, and if you don't know what that is, watch my previous videos. But nonetheless, they will have corrections. Okay. So back, I guess about I don't know, a year ago, I started to analyze the Bitcoin chart for my subscribers. Not so much that I care about Bitcoin, because I would never touch it, but it is a very good training tool for my subscribers. So we drew out the structure, which was a rising wedge, and we got the 1, 2, 3, 4, and a 5. Now you notice in a 5 it broke out. Okay, the structure changed completely from this rising wedge. Now, when I guess it was Friday, when people were asking me, well, where do you think the price level is going to change? Let's go a little bit further down to a 4-hour. I think it was Thursday when it started this rising wedge, which again, okay, it doesn't matter what time frame, what stock, what you're looking at. There's only a little bit of fuckery, I would call it, with indexes because of the savings bubble. But typically speaking, you're always going to get 3 waves in any structure. So, and a wave begins from the first counter move. So you have the thrust up, you have the 1, the 2, all the way up here, and then it just fell apart. Okay, so that's a 1, 2, 3 pattern that resulted to the downside. It doesn't have to resolve to the downside, but there will be a change in the structure. So let's go back in time, and this was on December 22nd, and we had this structure that was rising, and I said, Bitcoin alert, breaking down, results could be catastrophic for Bitcoin. Okay, and that was on the 22nd. You want to count how many likes I got on that one? None. 96 people watched it, but none. I got nothing. Okay, nobody wasn't clicking in their head. So let's continue now with the results. Well, there's the results. Fell apart. Okay, and it went to 13,000. Let's continue on. I said Bitcoin alert, but before I went to bed, I think that's somewhere here. Before I went to bed, I posted the this on my messenger for my subscribers, and I'm not sure if you can see it, but anyway, it says when I wake up, Bitcoin will be dead. Okay, and you can see it up here, right up top here. And then Bernardo, of course, said, "Yeah, I remember seeing that." Okay. So as you can see, since then, price went as low as 11,000. And this was an area that I was telling to my subscribers that you should see a bounce in Bitcoin. Now, how did I know that? How did I know that? Well, it's quite simple, because the structure broke out on a wave 5, and when it reversed, it came down near the top of the structure here. Okay, and I didn't necessarily think it was all going to be exactly at 11,500, but plus or minus a few thousand, especially with this volatility, is within reason, because it comes, it tests it, and then it bounces. Okay, because we're looking for that M pattern. Remember, we're looking for that M pattern to know that it's topping, and then it's going to fall apart. Okay. Sure enough, we got the bounce. And someone posted that someone was trying to sell him some Bitcoin at I think it was at, I don't know, 12, 13,000 at the time, or 12 and a half, $500 worth of Bitcoin or something. And I said, man, buy it, you know. And had he bought it, well, it would have went up to as much as $16,000 from 12, 13 to 16 in a day. $3,000, not a bad deal. Okay, so like in anything in charting, you never know. Okay, you know what's likely to happen, but you never know what's actually going to happen. And again, that is very important to remember. But most people don't have difficulty with it. They want to know for sure. Okay, but it's not. It doesn't work like that. You pick your battles. You pick good risk rewards, and you act accordingly. Now remember, Bitcoin has no fundamentals behind it whatsoever. The thing is useless. Okay, it's not like macroeconomics or a company or something. There's no value to it. Okay, don't tell me about blockchain, and don't tell me about that it's a scarcity and whatever. I don't want to hear it. There's no value behind it. Okay, so we are purely relying on the way people are going to behave in this particular trading vehicle. So when you see that it's a 43% or more than 40% decline, and you go back to this chart, you're going to see that it's done it before. Okay, this one was 30. You go back here, this one was 40. Okay, so it's done it before. It's not like it doesn't do it. Let's go back here. Okay, 40. See it? So it's done it before. And if it's done it before, then it's safe to assume that you will get a bounce around the 40% area. And the 40% area just happens to coincide with the structure, and therefore you can conclude that there's a likelihood that this will bounce. Okay? If it continues to break down back into the structure, then the likelihood is it's going to drop all the way to the bottom of the structure, and more likely than not continue on down and break the structure complete. Thus, if you would have bought around 11,000, maybe 12, okay, and it went all the way down to 10, you don't have to panic, okay, because it's still above the structure. Okay, likelihood is that you will make money, and it went up to 16,000. All right, that's a handsome return. That's another 40% return. If you just go from here, from the bottom, let's assume you got the bottom, okay, to the top, it's 40%. So it's a very, very nice, profit. So, for those of you who don't understand percentages, and believe me, there's a lot of you out there, you don't understand percentages. A 40% decline, okay, is not the same thing as a 40% rise, okay? And one of the biggest selling points that these Bitcoin pumpers are telling everyone is Bitcoin is up 1,000%, 2,000%, 3,000%. Yeah, okay, it can go, whatever, 100,000%. But remember this: you are always 100% away from zero. This is a very important point to remember. You're always 100% from zero. So when you get a 40% decline, you are only 60% away from zero. So when you see a 40%, you're saying, yeah, it's 40%. No. I want you to understand what 40% means. Okay? Even at today's prices of 14,000. Okay? You know what the peak market cap was? Peak market cap was around $340 billion. And the market cap today is $239 billion. So you lost about $100 billion in market value in days. If you go back on the chart, okay, the market cap was far less, much less participants, and if you lost, let's say, from 10 billion down to 6 billion, okay, it's not a big deal. But when you're talking about 300 billion down to 230, 40 billion, whatever it is, okay, it's a big deal. And the higher it goes, the more of a bigger deal it's going to be, because it's going to involve more and more people. And the more people that get hurt by it, because believe me, they're going to panic sell. If you bought at 20,000 and suddenly you wake up one morning and it's 11,000, you're going to panic sell. Especially if that money is borrowed or you need it, which is what most of these people are. Okay, they're in Asia. You're going to panic sell. It's just the way it is. And then what are you going to do? You're going to go and buy it again when it's back up to 14,000 or 16,000? You're not going to do that. Okay, your pee-pee was smacked. Your hiney hole is going to hurt. You're not going to do it. So what does that do? That person is going to go out and tell one person, that's going to tell two people, is going to tell four people, is going to tell 8 people, and then, people are going to start losing interest in it. So let's see if that's true. Okay, so this is Google Trends, and as you can see, interest over time, right? So this is Bitcoin over the past year, and then suddenly you got the rise, you got the price appreciation, and then you see the drop. Okay? So it's true what I'm telling you. This is a 5-year chart. Okay? Look at that drop. It's huge. So Google Trends is telling you, how do I buy a Bitcoin? The search for that sentence has dropped dramatically, almost 50%. What did price do? Almost the same thing, down 40%. 31 people viewed it. How many likes? 0. They don't want to hear it, because the people that are going to look at Bitcoin, they don't want to hear negativity, especially now. Okay, the people that don't own Bitcoin, they're like, yeah, whatever, it doesn't affect me, right? So it's not a big deal to them. But this is very good lesson for those of you who want to learn how to invest and understand charting. Okay, so enough of that stuff. So let's continue, and because I know you guys want to know what's next. So let's look at the whole structure. This is what is considered a stage 3 uptrend. Okay, so you had this uptrend here, then it accelerated, and then it accelerated again. This is right in here. This is stage 3. Usually stage 3s are ending. Okay, they're the last stage before they start to reverse. Now, what we are looking for is this. If the price action continues to come down and test this area, this will become a very good risk reward. Because remember, we are looking for that one more move up. That's going to be a lower low, come back down, break the previous low, okay, and it would look like this, and then the whole thing falls apart. Okay, that's the more likely scenario. If I'm wrong, then price should continue higher, break the previous high, and continue pushing higher. Again, we can never know where the top is. It's not our job to figure out. Okay, this could easily be a 1, 2, 3 to the upside. That's possible. And then it continues up $30, $40, $50,000. Okay, but we'll know. We'll know when it breaks this structure. Okay, but that's not what you should be thinking. Okay, let the chart tell you what's going on. That's the important takeaway here. Okay, so now I'm going to take you to a smaller time frame of 1 hour. All right, now what is more likely than not happening here, remember everything moves in threes, right, is you are getting a 1, a 2, and a 3. Okay, that's the more likely scenario. If it bounces from here and creates a structure that kind of looks like this, okay, then it's going to be a 1, a 2, a 3, and then back up. Okay, if it's thick like this, okay, then it's going to take off. We're not there yet. We are far from there. Now, if it comes back in and breaks this structure right in here, you're going to see a huge drop, at least to the bottom, and that's about $7,500. Okay. If it builds a pressure down here, something like this, more likely than not, it's going to fall down again. Okay, and then we're going to start looking for that $5,000 range. But if this falls apart, then you're going to get some kind of structure like this, and then the next one is going to be down to around $3,000, all the way at the bottom. Okay, so then you'll start getting this, and that will be it for a while for Bitcoin. So just to recap, either this is going to break out and start heading to the moon, and this will become a 1, 2, 3 up. Okay, or we're going to get the bounce, lower low, down, M pattern, finished. Okay, it's done. Or you're going to have the other scenario where it comes down, flag, comes down, flag, comes down, flag, and then just collapses. Okay, and that will complete the Eiffel Tower pattern. And more often than not, you're going to get what is called a dead cat bounce, where you get something to the upside and then it just falls apart. Okay, you can see that in oil. Okay, this is the monthly chart of oil. You got the drop, you got the bounce, you got the drop, and now you're getting that little bounce, and then you should see it roll over. Okay, it's the same thing. Wrong chart. Where is it? There it is. See it? You got the bounce here, and now after it died, you get this bounce, and then it starts to come down. So if Bitcoin is going to die of a horrible, horrible death, it's going to start looking something like this on the way down. Okay, so it's a drop, correction, drop, correction, drop, correction, drop, correction, drop. Okay, and then this is the structure. That's what it would look like. But again, we're not there. So for now, we're bearish on Bitcoin. Anytime it comes anywhere near the top of the previous high, we're looking for that M pattern to start to develop on a bigger time frame, longer term. And again, if you take out the log, this is, this looks finished. It looks done. This is an Eiffel pattern. Eiffel Tower pattern. There you go, got it. Okay, so and that's it. And then what should happen is this will come down, you will get the bounce, and then it will come back down. That's the way it's supposed to end. But again, we don't guess. We look for the evidence. We keep analyzing everything, and the more information we get, the more data we get, the more we know if we're right or wrong. So that's it. This is my analysis for Bitcoin. I hope you enjoyed it. I gave you some free charting, how to really understand charts and how to do technical analysis. Again, technical analysis in of itself is useless unless it's something like this. When you take technical analysis and you contrast it with real fundamentals, that's when it works the best. Thank you again. If you're interested, come down to Patreon. It's $5 a month. Pick up a book of the National Debit if you really want to learn how macroeconomics and the monetary system works and how to apply that into the real world and how to apply it on charts. Come on down. I think you're going to find it very useful. Thank you. Talk to you soon. Merry Christmas. Happy New Year. And bye-bye.